It's official. MicroStrategy is coming in right now facing its biggest unrealized loss, which is $10.8 billion. In other words, that's 6 years after buying Bitcoin. The company is now down 17% on its position. Comparison on the S&P 500, up 116. This is a hard pill to swallow, I think, for a lot of Bitcoiners and definitely for a lot of Bitcoin investors, because they have been watching this run up to 126, and then what has happened is that asset is now cut in half in less than a year. So the key here is, what will MicroStrategy do if we continue to see it slide? Now, granted, you could say, hey, Paul, it's a little different now because of the size of the market position that they hold now, but I think it has a lot of the same similarities. The thing that concerns me is going to be the contagion effect that sentiment could cause that wasn't necessarily happening back then. So the real question is going to be, how do they respond when sentiment truly does shift, and if a contagion effect occurs inside the stock as well as some of the financial assets that MicroStrategy has put out there in terms of Stretch and others. No problem, because Bitcoin, this is simply a capital rotation and not a Bitcoin impairment of volatility. I think the question mark is still out there in terms of being answered of how does this play out. The stakes are different this time around in this roulette wheel we call the markets, for sure.